Are you looking at MPW, Medical Properties Trust, and you're wondering what on earth? Pretty quick update. Despite all of the positive changes that the management team has been making, I did sell out of my position a wee while ago. However, I did have some other options still waiting in the wings. Now, as the prices have come down below $5, as I've watched and listened to the continued changes that the company and the senior leadership team are making, what I have done is I've opened up a few more short-term positions. Now, by selling cash secured puts, it means that I can sell those at a strike price below the current price. So if prices decline further and the options exercised, I'm going to be buying at a lower price than the current share price. And on top of that, it reduces the cost basis essentially for that investment because I also get the premium from writing those covered cash secured puts. That is my way of investing in MPW at the moment. Now, flip that around. When those options are exercised and some of those positions are opened, I'll then turn around and write some covered calls against the options, against the stock holdings that I then have. That will take the nice dividend yield on MPW and it will top it up as well with a little bit more options premium. Now, again, what that's essentially going to do is lower the cost basis for that investment. Am I fully confident that the company is being incredibly well managed? Well, the answer is no, not really. However, I think that the share price at the moment is representing a very large discount to the value of the assets that this company holds. Even though they hold a high level of debt, they still have beautiful assets. They've got that real estate, and that real estate still has a huge amount of value. It's got good diversification globally. Yes, they still have a very close relationship and a very large exposure to their largest tenants. But look, we all have to take this with a little bit of balance. Now, at the moment, the share price is so low relative to the value of those assets. At the moment, I think it's trading at a very nice discount. Yes, there is still risk. However, because those prices are so low now, I believe it's being purchased at a very nice margin of safety. That is, the prices are so low that automatically reduces the likelihood of, say, another 50% decrease in the value of my investment. And I'm offsetting this further with the use of those options. If you're enjoying this video, if you think the content's useful, if you think the content's helpful, please give me a thumbs up, hit me up in the comments down below, let me know what you think and help me out with the YouTube algorithm today. WP carry, WPC. Yes, I am not impressed overall with their decision. Yes, for a long time they've actually been reducing their exposure to the office sector. I'm still concerned about the speed at which they are trying to move, and I'm still concerned that this is going to reduce the value of these assets as they spin them off. Now, this is also one of those times where the managers are experts. They do understand the market. Now, I'm really trusting them that they understand that this is the best move, that they're not rushing, they're not going out there just to liquidate these assets and get a below value price for the assets. Are they actually seeing something even worse coming along? If so, where they think that perhaps in 6 months or 12 months from now, they won't be able to spin off these assets at the same value, at the same price, then maybe, just maybe, this is in fact a very smart move. I'm not an expert in these physical areas, in these geographic areas where these assets are held. I'm not an expert in this type of real estate. So I have to go out on a limb here and trust the management team a little bit. Now, what this change means is it does mean a decrease in the dividend. Now, I do not like that. I also think it's throwing away a beautiful long-term track record of dividend growth that WPC has built up over several decades. That does not encourage me. That's not good. But it is a small decrease. It's not a substantial, say, 50% or 60% decrease in the dividend. So yes, it's not the best. Yes, I'm not too happy about that. But at the end of the day, the company that is left behind without the office exposure is going to be a stronger company. It's going to have a better set of assets. Now, another interesting thing here is it reduces the diversification of the company. This can be a double-edged sword. More diversified real estate investment trusts or REITs, they tend to trade at a lower multiple for the price to adjusted funds from operation or the price to FO ratio as an alternative. What that means is the diversified REIT trades at a lower multiple. Essentially, the market isn't giving them credit in terms of a higher price for the diversification they hold. Usually, it's going to be the very concentrated REITs, the very specialized REITs that are in one particular market where there is, in fact, a higher price to FFO ratio, a better multiple. Now, absolutely, by taking these steps, WPC is going to look to try and increase that multiple. They're going to be looking for the market saying, hey, look, they're more specialized now. They're going to be able to do more and grow more faster. So this is a reason for increasing the share price of this company in the future. So what have I done? I have thought long and hard about this. I'm not happy about the loss in income, but it's still a good income. And I believe that the dividend growth rate should be maintained at a reasonable level going into the future. So for me, this is still going to be part of my long-term holdings, but I will be watching the management actions carefully. One of my big hesitations about selling it is I don't like to make big changes. I don't like to make big sales. Now, I've had some comments before that, look, Lincoln, you are too slow to sell out. Lincoln, you keep things way too long, even as changes happen. My personal observation is from years, decades now of investing and working in the stock market, is the more I trade, generally, the worse my performance. So the more I buy, the more I sell, the less likely I am to make good long-term gains. Now, that puts me in the uncomfortable position of saying, look, I possibly could sell here, but I'm not going to. I'm going to hold this position. I was committed to the company before. I understand the decisions that they've made. I don't know if these are the best decisions, but fundamentally, I think we're going to be left with a stronger company. And that, in my mind, as an investor, is still something that's important to me. So for me, yes, I'm holding WPC. What do you think? Is it still a part of your portfolio? Is it a position you're adding to? Or is it a position that you might make or add or create now that it's a more specialized trade? Let me know in the comments down below.